Hey YouTube, this is the Robinhood investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Vanguard lowering their ETF fees and offering the cheapest bond fund. Before I do so, let's take a look at the price movement and statistics. First ETF is VOO, Vanguard S&P 500 ETF. Past year, up 5.58%. Past 5 years, up 52.42%. Take a look at the statistics. So current price is 257. It's heading towards the higher end of the 52-week range. Market capitalization is $102.8 billion. PE ratio is 20, and dividend yield is 2%. Next is VTI, Vanguard Total Stock Market ETF. Past year, up 5.96%. Past 5 years, up 49.53%. In terms of statistics, it's also on the higher end of the 52-week range. Market cap is $107.96 billion. PE ratio is 21.25, and dividend yield is 1.91%. Last but not least is BND. This is the total bond market ETF. Past year, up 0.2%. Past 5 years, down 2.34%. Statistically, it's also on the higher end of the 52-week range, but since this is a bond ETF, it doesn't fluctuate too much in terms of pricing. It's not as volatile. Market cap is $37.38 billion. And dividend yield is 2.69%. So as I mentioned, Vanguard is lowering their ETF fees for the 3 ETFs. And this is competing with other ETF issuers towards 0 fees. And this will benefit investors because the expense ratio will be lower and it'll be cheaper to hold the ETFs. So this will be for VOO, VTI, and BND. And for those who are not familiar with Vanguard, Vanguard is the second largest issuer of ETFs and is making itself more competitive by lowering fees on 3 of its popular products. So the asset manager will reduce fees on its total bond market ETF, making it the cheapest US bond fund. And Vanguard also plans to cut costs on Vanguard S&P 500 ETF, dropping them below offerings from BlackRock and State Street, which are the competitors that track the same index. And the company is pushing down the fees on its total stock market ETF. And in terms of the actual expense ratio, the total bond market ETF will change its expense ratio to 0.035%. That makes it cheaper than comparable funds, the Spider Portfolio Aggregate Bond ETF, which has an expense ratio of 0.04%, and iShares Core US Aggregate Bond ETF, which maintains an expense ratio of 0.05%. And the Vanguard S&P 500 ETF will have an expense ratio of 0.03%, making it cheaper than iShares Core S&P 500 ETF and well below Spider S&P 500 Trust. The total stock market ETF will also lower its expense ratio to 0.03%. So being 0.03% for both the VOO and VTI, that's going to be extremely competitive in the market just because these products were already well diversified and already had a very low expense ratio. But this makes it even lower than before and will hopefully make the competitors like BlackRock and State Street more competitive and lower the expense ratio. So me and you can be diversified in the market at a lower cost. So that's all for this video. What are your thoughts on these ETFs? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up And if you want to learn about investing, subscribe to this channel. See you in the next video.